Good morning everybody, and welcome to today's market report from Vantage Markets in collaboration with OneClickFX. European stocks rose in early trading on Friday as investor risk appetite was boosted by signs of an economic recovery in China, even after expectations for European Central Bank rate hikes kept government bond yields at their highest in years. Investors are trying to gauge the path for Federal Reserve rate hikes after strong US data in recent weeks suggested rates may need to be higher for longer. But stock markets rose on Wall Street overnight in a move analysts attributed to Atlanta Federal Reserve President Raphael Bostic saying on Thursday that the Fed should stick to steady quarter-point rate hikes. Gains continued during Asian trading, with investors optimistic about signs that the world's second biggest economy is making a steady rebound after the Chinese government ditched stringent COVID controls in December. Activity in China's services sector expanded at the fastest pace in 6 months in February, driving a solid increase in employment. Also, the recovery in Eurozone business activity gathered pace last month as growth accelerated in the bloc's dominant services industry, providing the latest piece of evidence suggesting the currency union will avoid a recession. A PMI covering the services industry jumped to 52.7 from 50.8, just below the 53 flash reading. With demand strong, business across the region raised prices again, albeit at the slowest pace in over a year. Another 50 basis point increase in the European Central Bank's deposit rate this month is a done deal, according to economists polled by Reuters, who expected an additional 25 basis point lift next quarter to give a terminal rate of 3.25%. The ECB will also continue to reduce the size of its balance sheet after ending the full reinvestment of maturing debt earlier this month. Now let's move on to the technical analysis, starting from the US indices. This week, all three major indices out of Wall Street either held support or invalidated the short zone of the percent pivot grid. Starting from the Dow Jones, as you can see, the index held support at 32,638. From there, the market rebounded and went back above the resistance, the weekly resistance at 32,966. On the Nasdaq index, we saw a breakout below the support at 11,913, but then the market rebounded from the following support at 11,854, and from there it went back above the weekly resistance at 12,033. The same thing happened on the S&P 500, which also held the -1% pivot support, and from there climbed back above the resistance at 3,988. So at this point we start monitoring the monthly resistances that we see on the daily time frame. Starting from the Dow Jones, we see that we already broke above the monthly resistance at 32,980. Should the market be able to remain above the level, change its polarity, we could see a continuation of at least another 550 points towards the 3% mark for a pullback of the previous price structure. Should then the market be able to change the polarity of this resistance, we could see a continuation towards last month highs in the 34,550 area. On the Nasdaq index, the monthly resistance is yet to be tested, and it's positioned at 12,141. Should the market be able to break above and change the polarity of the level, we could see a continuation towards the previous price structure around the 4% mark at 12,500. Should then the market be able to break that resistance, we could see a continuation towards last month highs positioned at 12,912. The situation is similar on the S&P 500, which is yet to test the monthly resistance at 4,004. Should the market break above and change the polarity of the level, we could see a continuation towards the previous price structure in confluence with a plus 3% pivot at 4,084. Should then the market be able to break this resistance, we could see a continuation towards last month highs marked at 4,195. On all three indices, of course, a sign of weakness would be a return below the previous monthly closes. In Europe, the DAX 40 also held the weekly support at 15,156, and from there it climbed back above the plus 1.5% pivot at 15,461. On a monthly basis, we are just below the monthly resistance at 15,506. The weekly move, as you can see, brought back the index in the upper portion of the consolidation pattern that developed in February. Should the market manage to break the resistance and change its polarity, the resistance at 15,506, we could see the beginning of the climb towards 16,000. The 16,000 round level is in confluence with the plus 4% mark. Finally, in Asia, the most interesting index is Hong Kong 50, that, as you can see, made a 5% move to the upside after Tuesday's manufacturing data, and then, after a brief correction, resumed the climb. On a monthly basis, we are largely in positive territory as the market broke above the plus 4% pivot at 20,685. Should the market from here be able to change the polarity of the level, we could see a continuation to the upside towards the previous swing high in confluence with the plus 9% pivot at 21,679. Moving to the forex market, let's have a look at the euro dollar, which is little moved since the beginning of the month. As you can see, we are slightly above the previous monthly close. The pair is gaining plus 0.35%, and we are just inside the monthly starting range. The levels to monitor in March are the resistance already tested at 1.0680 and the support at 10468. Should the market be able to break above the resistance, we could see a continuation of the short-term trend towards at least the previous price structure in confluence with the plus 2% pivot at 10786. Should we see from this level a quick return below the previous monthly close, which we will start monitoring the support, potential target for sell positions, and also an accumulation level in view of a restart. In closing, let's have a look at the monthly analysis for crude oil and gold. As you can see, crude oil just broke above the monthly resistance at 77.43, and now we are looking at a pullback of the violated resistance. Should it change polarity, we could see a continuation of the move towards the previous monthly highs in confluence with the plus 5% pivot at 80.50. In the opposite direction, should we see the market quickly return below the previous monthly close at 76.66, we will start monitoring the monthly support at 75.90 as a potential accumulation level to trade the Chinese demand pickup. But should the market break and change the polarity of the support, crude oil could quickly return in the $73 area. Moving to gold, as you can see, we just broke the monthly resistance at 1,844. Should the market be able to change the polarity of the level, we could see a continuation of the move towards the previous price structure in confluence with the plus 4% pivot to 1,899. In the opposite direction, signs of weakness will arrive with a quick return below the previous monthly close at 1,826. That's all for today's report. Thank you for your attention and good trading from Vantage Markets and OneClickFX.